All right, guys, back to work, back to work. Quad Witching is right around the corner. It's Thursday evening. It's June 17th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. Not just any Friday, Quadruple Witching, all four asset class expiring. Got a busy day ahead of us tomorrow. Of course, got a great video in store for you guys and gals tonight. Charts are all prepped in the background. As you can see, S&P's ready, Nasdaq's ready, gold is ready. Where do I begin? Lots of setups for tomorrow. We got some ranges, we got some trends, we got some big runaway markets today. Man, oh man, I see lots of reversal potentials for tomorrow. Lots of ranges as we go into quad witching. And of course, boy, some big strong trends today, possibly some continuations as we go into the end of the week. Boy, by the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know the places you want to stay out of trouble tomorrow as well. So make sure you watch all the way through to the end. Before we jump in, though, and get this party started tonight as we finish up the week tomorrow, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit that little bell icon so you always get notified every time we publish something new. And if you guys have any questions for me, don't forget, drop those questions for me in the comment section. I'd love to answer all your questions. And if you guys enjoyed the video tonight, if you enjoyed this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here button on this YouTube channel. But make sure you subscribe. That we get all the good stuff direct to your inbox every time we publish something new. Let's get this party going here. Thursday is behind us. Friday, Quad Witching Friday is right around the corner. And of course, as I mentioned, lots of great trades on my radar for tomorrow. Boy, got a range on the S&P, got a trend on the Nasdaq, right? Got maybe a range, maybe a spike in channel on the gold here. Boy, oh boy, lots of great trades. I'd love to buy a pullback on the S&P right now. I wouldn't mind buying a breakout on the S&P. The S&P, we definitely find ourselves in familiar territory here tonight. We're bullish. There's not a lot the bears can do. The bears have a very difficult time going into tomorrow's trading session. And you know me, anytime I see the bears are boxed in like this, I tend to be looking aggressively at long side. We saw what happened last night into today. I'm looking for something very similar to that here for tomorrow. I'm going to go over all the good stuff on the S&P here. Nasdaq is probably the biggest question mark that we have for tomorrow. We're definitely trending, but we're sitting right up around some major highs here right now. So, I'd love to buy a pullback on the NASDAQ. I would love to buy a continuation on the NASDAQ here. So, we're kind of waiting to see what we're going to get, whether it's a range tomorrow or a channel tomorrow, or trend tomorrow. I'm going to walk you through some different scenarios so you're ready for tomorrow on the NASDAQ. And then you get the gold. Gold is a pretty interesting chart here tonight. Gold, of course, had that big bloodbath down today on the gold. They finished the day, you'll notice, in a range here, but you'll notice we're underneath that trading range right now. This really, we're definitely bearish on the gold, but anytime I find myself kind of pinned underneath a trading range, for example, what are the bears going to do right now? Unless we can get this thing to continue going lower, I would like to get long. I'd like to be a buyer for what I call a slingshot reversal on this gold. And honestly, if we play our cards right on the gold here, we might be able to get the long off the lows and then complete that pendulum swing and short it back down again. So I'd like to see if we can't maybe play both sides of this market here for tomorrow. So, boy, a lot to cover here tonight in the video. As you can see, I got a lot of good stuff. Long sets, short setups, breakouts, reversals. Before we jump into these charts, though, let's make sure we're all on the same page here for tomorrow, because tomorrow is not your average Friday. Tomorrow is Quadruple Witching. Now, in my experience, Quadruple Witching usually ends up doing a lot of this. It's a lot of chop. It's a lot of backfilling. The classical quadruple witching, and by the way, quad witching means all four asset classes expire at the end of the day tomorrow. It's actually they expire Saturday morning, but the end of the day, closing bell tomorrow. Normally, the third Friday of every month is triple witching, right? Where three different asset classes expire. I'll spare you the history lesson on this, but the quadruple witching, all four different asset classes expire. It takes on a bit of a self-fulfilling prophecy to it on that Friday. Traders expect to see high volume, but usually not a lot of movement, not a lot of range. Now, I'm not sure you've been paying attention, but this year is a little bit different than other years, right? We've got the pandemic, the reopening, the stimulus. So again, most quadruple witchings, and by the way, quad witchings are the third week of March, third week of June, third week of September, and the third week of December. In my experience, the March and June quad witchings are definitely the most kind of, I wouldn't say difficult, because you can trade any environment as long as you got a good plan. I wouldn't back away from it. Some people say, well, I won't trade a Monday, or I won't trade this. That is usually spoken like someone who doesn't know what they're doing, right? If you know what you're doing, the key is just take what the market gives you. That's the key for tomorrow. But be aware, the classical kind of, quad witching is going to be a lot of volume, but a lot of backfilling. Because remember, you get a lot of people who are going to be using the futures markets to hedge themselves, right? So, and again, I don't go too far down this rabbit hole, right? But the futures markets are widely used as hedging instruments for equities and options, and because they're all expiring tomorrow, we do get a lot, again, high volume, smaller ranges are the typical quad witching. So we saw some really big moves today. I wouldn't be surprised if we see some really narrow ranges develop tomorrow. I love ranges because ranges act like magnets. We can buy low, sell high, fade the breakout. So again, you don't want to back away from it, but just be aware that's kind of your typical personality on a quad witching day. High volume, smaller, narrower ranges because of all the people who are coming in, getting out of positions and manipulating their portfolio, using the futures markets, right, as kind of a hedge. So that's kind of what to expect for tomorrow. Now, again, we might see some more big moves tomorrow as well, because these markets, I don't think, are done reacting to the FOMC announcement we saw on Wednesday. Had some big moves today. Hopefully we'll see some more big moves tomorrow. But again, be realistic with a Friday morning quad witching. It may be very narrow, a lot of volume, but very, very narrow ranges we may see develop here tomorrow. There's no major news tomorrow, right? Which usually means 10 o'clock Eastern time is the best time to look for trades. Obviously, we're going to take whatever we can get tomorrow. But when there's no major catalyst on the schedule, usually 9:45, 10 o'clock, 10:15 in my trade room is where I tell my clients really make sure you're paying attention. If you could only be at your desk tomorrow, maybe that 9:30 to 10:30 hour would probably be where you'll see some of the best setups if you're with us tomorrow in the trade room. Tomorrow's a Friday, right? So early in, early out. You don't want to go too late after 11 o'clock, 11:15. In fact, usually on a Friday, you can set your clock by 10:45, because 10:45 on a Friday, especially after a busy week we've had the last couple days, you'll be amazed how quickly the personality will get drained out of this market after about 10:45 Eastern time. You're more than welcome to leave positions open into lunch, into the afternoons, right? If you can catch a runner, remove the risk and leave some positions open, to run in the close, that's fine. But taking on new risk late in the morning, early afternoon on Friday, just be careful. Just be aware. You're going into an environment where professionals are not trading that stuff. It's all rookies and gamblers, and that leads to a kind of a gambler's kind of personality in the markets after 11 o'clock on a Friday. We'll talk more about kind of what to expect tomorrow in the trade room, but that's obviously kind of the basics here for tomorrow. No major news, and again, I would definitely make sure you're at your desk 9:30 to 10:30 tomorrow. Chances are that's where the good stuff is going to be. Now, I keep mentioning our trade room. We open up our trade room every morning, and we trade together at 8 o'clock Eastern time all the way through to the end of the morning session. I would love to have you there, right there with us. I'll put all the membership links you guys need. I'll put them right below this video, either on the blog or in the description of the YouTube video. So grab that link, get registered, and we'll finish the week here with a bang in the trade room tomorrow morning. Back to our charts here now. You guys did not come here to talk about quad witching. We came here to talk about some setups for tomorrow. S&P's ready. Nasdaq's ready. Gold is ready. I want to go right into gold here right now, but I'm going to say gold for a little while right later on in this video right now. Gold's got a pretty exciting set of setups there, so we'll definitely talk about that. Let's start with the S&P first here. Right, keep you guys on your toes here tonight. I'm kidding with you. What's the main component here right now on the Emini? The bulls got their reversal, right? The bulls got the reversal. They're 1, they're 2, the reversal, and that pretty much went into a trading range. And that's pretty much that's pretty much the key component here right now on this chart. The bears gave it a very good effort to kind of retest that low, but as you can see, it was not successful. So that is definitely the main component right now. It's a bull market into a trading range. Ranges act like magnets. And whenever I have a bull market into a range, I know that support levels below the range are where I want to be getting in, right? We're going to fade the edges. I love the trend line underneath the channel here, or under the range. I love this channel, right? How that lines up. These are all really attractive areas down there, right, to buy as support. The second kind of component of this chart right now is this slingshot coming off of the low. I kind of call it a slingshot because it's kind of feels like, right? It winds up as it goes lower, and you're going to see on gold here in a moment. Gold, hopefully this will be what we get on gold and get a nice little slingshot going higher in the gold here. Gold has, the S&P slingshotting right higher here, and of course this is the second component. Is we do anticipate a run back up to complete that pendulum swing, which surprise puts us right back into that gap, right into that range where we began this week, right? Don't forget, all the way back there, right? That's last Friday's close. So would it be totally surprising if the market, right, tumbles on FOMC and then right back where it came from? Shouldn't surprise you whatsoever. Markets do this all the time right now. So that weekend gap, that range overhead, that is a big target here for the buyers. And if they can get the party really going, that all-time high up there, 42.58 and a quarter, that is also a very interesting spot there if we can really get this thing cranking here as we go higher. The sellers right now, sellers really have to be careful. They do. They don't have a lot of options right now. There's a big trend line coming in off that low. You really can't sell it as it's going lower because you're selling below a range. They've already tried that gig and it didn't work very well earlier, and you certainly can't sell it as it goes higher, right? As you go higher, you have all of that momentum right now. Are you going to want to sell into that move? I hope not, right? I hope not. So we find ourselves in yet another position right now in the S&P this week where if you're a seller, you're scratching your head right now going, where can I get in, right? Where can I add? There's not a lot to work with here. So what would be my favorite trades for tomorrow? Well, I would love to get a pullback, right? That's the first thing. My favorite trade for tomorrow would be combining this channel with that triangle right there. I mean, that's just a beautiful spot right there. Now, there's kind of two ways you can buy it as the market pulls back. One would be your typical failure setup, right, off of the low, failure into pullback combination, right? Failure into pullback combination. Imagine you pull back, right? The bears come in, they try to get short, right, going lower. We, of course, then can buy right into their stop losses as the price snaps higher. And oftentimes, that failure will go up, pull right back. You can grab it quickly there, right off that first pullback, off the moving average. I like to draw a little trend line there, little trend line right there, and grab that new hidden channel there, right? Kind of a channel inside of a channel. But that would be kind of what I would love to see here. That's one way to buy on this pullback. It's a failure into pullback combination. I also honestly wouldn't shy away from if we take out those lows. If we take out those lows, now remember that'll be a very big bear move down at that point. We'll take a look at that two-try failure that we talked about in last night's newsletter. Pretty much the same thing we see over the left side there. if we have that big, strong breakout down, and we'll talk about how to sell this thing in a second, but if we see a real strong move down here, you know that sellers are going to try to use these trend lines, right, against us, right? They're going to try to hit that thing going lower here. Whenever we see a lot of momentum in one direction, we have to expect another leg in the same direction. So we don't get too early. I'll wait for the bears to try once, try twice. Again, look here, right? Go down, bears once, bear twice, and then I can buy into those stop losses, right? So that's going to be, and again, we call these two try failures because there's two tries, right, for the bears here. Now remember, there's a bunch of ways you can take those trades, right? You can mark up that trend line, buy off that trend line. You can buy into stop losses. So my favorite is always buying off the trend line, right? You can also, if you don't get the trend line for whatever reason, buy into stop losses for that rip going higher there. And then remember, we oftentimes will see a new channel come up, right? And you'll see a pullback off the low of that channel, right? So pull back right away, right, into that channel low, if you will, right? It's a failure into pullback, combination as we call them. Now, be aware, right? Be aware if we end up down to those lows, those bears come out, they try a few times, right? And the market snaps higher here. I draw that channel over, right, off those highs. And then what I'll do is I'll drill down to a faster time frame and grab that entry. If you look in the upper left-hand corner, this is a 6,000 tick chart here on the S&P. I'm not going to trade off that 6,000 tick chart tomorrow. What I'll do is I'll drill down to like a 1,000 tick chart, and I'll find my two favorite entry patterns off the lows of those new hidden channels are going to be what we call traps, failures into pullback combinations off that low, right? So imagine you go down to a faster time frame and grab the entry off that low. Now, I'm not going to go into all the details of how to time the entries, find the channels, trigger the signals. I'm not going to go over all that right now, but I do cover all of those details in our Quick Start trading course. I would definitely grab that Quick Start trading course. It's an easy shortcut to get you up to speed, the right charts, the right indicators, all the setups we're using, how to find the channels, how to find the ranges. You'll learn that stuff in that Quick Start trading course. It's a nice little shortcut to get you up to speed so you can make the most of your time together here, either on this newsletter or with us, of course, in our trade room. So definitely grab that Quick Start course, right, that pops up in the upper right-hand corner. I'll also drop all the links you guys need in the description here, right, of this video. What else can I do? So now we know how to buy the shallow pullback. We know how to buy the deep pullback. Can I buy the breakout? Absolutely, I can. In fact, this is one of my favorite types of trades lately over the past few months are these slingshot trades as we go. Let me get rid of this channel here for a second. And what you want to be thinking about is two types of entry patterns as we go higher. The one that I like the most in these kind of slingshot environments is a trap entry as we're going higher. In fact, we've seen a lot of these this week in our trade room. Not necessarily bullish, right? A lot of them were bearish early in the week, right? But that's the idea. The idea is we have a strong run higher. We see a shallow pullback to the moving average, a higher high in price, and that trap low. Again, you're going to learn a lot more about these patterns in that Quick Start trading course I mentioned earlier. And also, too, don't forget, you'll learn about this in the course as well, right? Mark the high, mark the low. I wouldn't be upset if you can combine that entry off the low of that channel. Now, we may not get that entry pattern. For example, I think the pendulum swing is where this market wants to go, right? But like I said earlier, do we really? Come on. The all-time high is right there, right? Nasdaq's back to all-time high, right? The S&P might be a little jealous of its tech counterpart, right? It may say, no, I want to be back there too. We may see this thing jump up. The buyers may hold the pullback, and this thing may launch, right? Or what it might do is it might grind. Right? That slow kind of melt up that Fridays love to do. Fridays love that good old melt up market, don't they? Or melt down. We saw one, was it last Friday or 2 Fridays ago? You know what I mean, right? It's not some blistering hot move, right? It's not like, whoa, but it kind of grinds, right? It doesn't pull back. It drives you crazy sometimes, right? Those kind of melt up markets, right? And that's a lot of that will be because of the all-time highs being such an easy magnet. And again, the fear of missing out for people who are in this thing already. What I would do in these situations is draw that channel, right? Find that new hidden channel. And I'll give you a hint. If it really grinds higher, right? If it grinds and grinds and grinds, you're going to want this channel to be nice and steep and nice and tight. And then what you want to do is find your way in on that first pullback right off of that low. Now, is it could it be a trap entry? Hopefully. I love traps right below that. But again, I'll take a trap entry, a failure entry, a failure into pullback combination, whatever I can get. And again, you'll learn these entry setups. You'll learn how to find the channels and all that stuff inside that quick start trading course linked up in the upper right-hand corner, right? So that is another breakout scenario, right, as we go higher here. And again, if we do keep going higher, right, again, you know where the market wants to go here. Don't be surprised if we jump up and go sideways up here. You guys already know how to trade a range, right? Look for support. Look for support below the range. Use those failure into pullback combinations. You'll see a lot of that in the video course, right, that I mentioned before. So if the market does go sideways up there, which might happen, I would be surprised if it stopped there, though, if it really shoots like that, just because of with the Nasdaq already being at the all-time highs. We'll see how it looks tomorrow once we get in there and get our hands dirty on it. How do I sell this market right now? That's the hard part. That's difficult. The only way that I think you can really sell this market right now is you've got to get some strength going lower, because if you try to go higher here and sell up here, I mean, you're asking for trouble. You get that weekend gap up top there, so I would like to avoid trying to get short at all up here, unless, of course, we see them take the pendulum swing out, right? Give those buyers a couple tries, right? 1, 2, again, kind of like this one right here, right? A 2-try failure, right? Mark up that trend line. I wouldn't mind selling that. Right? I wouldn't mind selling that, kind of the opposite of that trade from early this morning, right? I wouldn't mind selling that, but, again, we're going to have to take the pendulum swing out, wait for the buyers to try a couple times. Now, 9:45 tomorrow morning, 9:45 a.m., but like I said, 10 o'clock, that could definitely happen tomorrow. So don't be afraid of that. But as far as the market goes up and I'm going to short back, no. I'm going to make sure I wait here to get up and to get that pendulum swing, take out those highs, right? And then we can dump this thing back down in. The only other way to short this is I've got to get some strength going lower. But like I mentioned earlier, we have this, trend line coming in. I mean, it's very difficult to get short as this market, right, runs lower. So in these situations, what you'll want to do is you'll kind of have that kind of push and pop, as I like to call it, which means you've got to see a very strong move down, take out those lows, and then wait for that pop up, get buyers stuck a couple times and short into it. Like, that's the only way you're going to be able to short this thing. Again, because while it's going lower, you can't just sell it because you're at support levels below that trading range. So, think of that again. I kind of call it the push and pop, right? It's what you got to do is you got to push this thing lower. You got to get that pullback, right? And when you get that pullback, buyers are going to be trying to force this thing back in. Let those buyers try a few times. And we know at that point, that strong move going down, I'm trying to use those levels of resistance, and I'm trying to sell here, of course, now back to retest that low. Very tricky for that short, because you got to get enough strength, right, to basically push back the buyers. And then once you get that strength, now you get another problem. Now you're at these lows right now. So you got to pull off the lows, get the buyers to commit, right, and then hit them right in their stop losses with another one of those failure setups. One of my favorite ways to trade is trying to catch counter trend traders on the wrong side of the market and just, in this case, sell right into their stop losses for a snap right back down to those lows. The only other way to do it would be we see it take a big strong move down, the bears hold, and we keep on grinding. Remember, I'll tell you, Fridays love this type of stuff. Fridays love this kind of slow-moving, slow-burn market. Again, you'll see a lot of Fridays will do that. If this thing starts to grind going lower, what does that mean? Spike and channel, right? What do spike and channels tell us to do? Find prior swings, focus on trap into failure combinations, right? Trap. And again, I'm just simply drawing the chart right now. Trap, right? Trap of the highs. Get above those prior highs, traps into buyer, right? Into buyer failures and back down again. So if it keeps on grinding lower, that's a very good sign for the bears. We'll just wait for that pop up and short that first pop. That's all you can really do. If the bears want to really take this, where do they want to go to? That same spot, 41.65, 41.60 is a major, major low there back from the beginning of the month of June. So we definitely have that on our radar for tomorrow. But, again, we got to get either that real strong push and go, or the push and pop, right, and the failure back down. It won't be easy, right, but we can definitely handle it. Just going to wait for the proper entry trigger. All right, S&P is all ready to go. And again, make sure you grab that quick start course if you've done so already. That way, when I say a two-try failure, you know exactly what I'm talking about here on this video. How about some Nasdaq here? Let's grab some Nasdaq here coming up next. I'll make you guys wait for the good stuff here for the gold right at the end. What's the most important factor here on the Nasdaq here for today? Well, first of all, it is a trending market, right? So trending markets tell us, buy pullbacks, trade breakouts, look for reversals and ranges. So definitely a trending market right now. There is a range you can see kind of starting to brew here on this chart. I think the most important thing right now is that we have a strong bull trend, right? Strong bull trend going higher. And like anytime we see a strong move in one direction, we expect to see a pullback and a retest of that high. So right now, if we were in my trade room with all of our clients, I would say the bulls have control, but there's no urgency in this market right now. There's no tension in this market. There's no FOMO in this market right now, right? You know what I mean? We're at all-time highs, right? These are all-time highs. The S&P, of course, still trying to get up to their all-time highs right now. But right now, there's no tension. And what I mean by that is, like think about it. When you see a strong move higher like this, what happens? It creates tension in the market, right? People don't want to miss the pullback. It creates FOMO. And what it does is it really increases my odds of success on that pullback, right? Especially if there's a little trap right off the low of a channel. So when I see a strong move in one direction, it creates that fear of missing out, that tension in people, which increases the odds of our success on that pullback. But once I get back to these highs, is anybody saying FOMO? Is anybody worried they're going to? No. I mean, besides, the complete rookies who are breakout traders, right? I mean, I guess there's always a breakout trader here and there, right? But, as far as professional traders go, professionals not buying breakouts at all-time highs. They've actually been around long enough to see markets go down, not just go up all day long. But the reality is, all kidding aside, there's no tension. There's no FOMO. There's no urgency in the market. So my strategy has always been, when I don't have that urgency in the market, I have to create that urgency. What that means is I have to pull back, right? Give me a pullback, right? Let the buyers buy low. I get a great support level down here, right? Let's buy a pullback. Or give me a breakout again, right? Give me another breakout. If you give me another breakout, that will create that FOMO. That will create that tension. It will create that momentum that I need, right, to get a nice high percentage trade. So this is a really good example of where we don't have that tension, right, that urgency, that FOMO in the market. Now, this may be a sign of things to come here for tomorrow. Like I mentioned, kind of quad witching is notorious for those kind of, high volume, right, but ranges. So, this may end up going into a range here for tomorrow. It may also, as you can see, end up kind of fleshing out a larger channel. So we're going to talk about all of those potential setups here in this video here. So let's cover all the basics here right now. What I would love to do is get down in this area. If I had it my way tomorrow, if they phoned me tomorrow and say, all right, Joe, what do you want, buddy? I would say, get me down that 14,030, right? Somewhere close to that area. Doesn't need to be exact, right? I want to get in that area. That'd be a great spot to buy a pullback, right? And I shouldn't say buy a pullback, buy a failure. If I can get that pullback coming off that high, get that moving average coming over, just like we saw back here, right? To get that sharp pullback, the bears come in, they foolishly try to get short, and of course professionals are there to buy right into their stop losses. Thank you very much, right? Same thing, right? So failure pattern on the pullback, and again, you always want to watch for that failure into pullback combination coming off of that low, right? Failure, pull back, target, back up to retest the high. Now, unlike the S&P, if the market runs to these lows, we're not going to be buying that. It'll be a little bit more bearish. However, though, I will say, let's just say, for example, the market was to really dip, right? Let's say down to that weekend gap. I would still be open-minded to a buy, but I would have to wait for the 2-try failure, right? The 1 try for the bears, the 2 try for the bears. And then oftentimes on these deep pullbacks, right, they get well underneath those support levels. A lot of times what happens is these will snap up and go right into a trap, right? That trap entry, because again, FOMO, right? That's tension right there, right? That's tension right there. You pull back, what's going to happen? The bears are going, oh my goodness, maybe we're going back to these lows. The bulls are going, no, this is a pullback. Get me in, right? Tension. It creates that urgency. It creates that stress in the market, and that's where the money is, right? That's where the money is in trading. The money's not made when markets are sitting there and not doing anything, right? It's like riding a bicycle, as I always say. It's easier when it's moving. It's easier when it's moving forward, moving backwards. Anyways, so again, we call these 2-try failures, right? 1 try, 2 try. Looks exactly like that guy right there, right? We talked about that one last night, right? We talked about last night, right? They pull back. They're very bearish, right? So 1, 2, back up, same thing, right there, okay? And then again, watch that trap, right? Because you're not going to want to buy into those highs here, okay? So those are kind of the pullbacks I'd like to get here, right, on the way back up to retest those highs. Now, how do we buy the bull breakout? A couple ways you can do it. We talked about the breakout patterns, right, on the S&P. We talked about how this is a major measured move. For right now, though, let's pretend this measured move doesn't exist, because if I buy a breakout, I'm not going to be looking. I'm not buying something that is timid. So, couple options here right now. First of all, I've got that channel. Okay, so one option would be we rotate, and this channel, I'm drawing it as best I can right now. This channel may end up getting adjusted, right? So if we go higher here, this channel will get adjusted higher. So just kind of bear with me on that. I don't exactly know all that part just yet, right? Let's say, for example, though, this resistance here becomes support. You can kind of see where I'm going with this, right? So we go higher, we pull back now, we go underneath the moving average. Can you see this, right? Failure into pullback combination, right? Failure pattern, we go below the moving average, bears foolishly try to sell short into pullback combination, targets are back up into that range. At that point, if we're trading off the low of that range, you want to look left, measure that one, and that's your target, right? Right up there, right? That symmetry target. Trending markets, measured moves, channels are my bread and butter. You'll learn all about measured moves and symmetry and channels as part of that quick start trading course, right? It's a great shortcut. Kind of get you up to speed on how I do things here at School of Trade. So definitely grab that quick start class in the upper right-hand corner. So we've got that. Now, could we really spike, right? Could this market really jump, right? Could it really jump? Certainly, it definitely could, right? Mark up the high, mark up that low. Again, this is a 4,000 tick chart. I drilled down to an 800 tick chart now, right? I get my failure pattern, right? I get my trap pattern, my pullback combination off that low, or strong move up, shallow pullback, right? Higher high in price, trap low, right? Trap off that low. That will be a great trade, right? That'd be a great trade. And again, don't forget, you can always add that channel on there to increase your odds of success. Also, too, again, right? Don't forget, at any point tomorrow, and it could be up here too. Don't forget, it could be a little bit higher here. We may start seeing this thing go into a trading range. So the minute we start, and right now I'm kind of making an educated guess on that. Let's say, for example, though, again, remember, quad witching, high volume, narrow range. Let's say we just keep on trading sideways here. What do we do at that point? What I'll do at that point is hopefully we'll find an expanding triangle low. Hopefully we'll get something like this, right? We can draw that trend line down like that, because those trend lines, again, let me see this one over here. Those trend lines are great when it comes to finding entries. Get down around that low. Let's make that trend line different color here, right? Down around that low, just find support below the range, combine those support levels with those failure setups, right? And again, I'm just simply kind of drawing on my screen right now, right? But you'll see hundreds of examples of these types of setups in that quick start class, and you'll see what I mean, right? Find levels of support below the range, combine those levels of support with your entry pad. In this case, it's a failure setup right off of that low. Bulls, right? Bulls have control. And then remember, if you go back and remember the S&P, a lot of times these will slingshot right into those traps. We see this a lot. This is very, very common, right? Where you'll see the failure off the low, that momentum spikes and runs higher, and you get that little trap, right, as a little cherry on top. And again, leave that last contract on to run. It's a Friday. Fridays are great to leave those little pieces, right, of the puzzle on there, or little piece of the pie, right, the position opened up there. All right, how do we sell this market right now? Right, get a pretty good idea of how to buy it, right? Well, we're bullish right now. How do we sell this? There's actually a couple of ways you can sell this because, again, there's no tension in the market. There's no urgency in the market right now. We've already got the buyers. The buyers have got what they want. And as I mentioned in last night's newsletter, trading does not need to be a zero-sum game. The buyers can get what they want, and the bears can get what they want. It's not that one side can only win, right? They can both win. They just can't win at the same time, right? So buyers have got what they want, right? Buyers got what they want. They wanted to retest that high. Now, as with those buyers retest the high, can I get a pull back? Buyers try once. They fail. Buyers try twice. What does that do? That now creates a falling resistance trend line. We now have buyers trying once, trying twice, right? You've got all of their stops sitting right below that low. Strong signal candle closing below the moving average, right? There's your short on, again, a 2-try failure, right? Maybe we don't get that trend line and the market collapses into stop losses, right? Then draw that trend line down. You got it. Mark that low. You better grab that first pullback. Your job is to grab that first pullback, right? So again, we go up. We retest the high. There's no urgency right now, right? There's no tension. The buyers got what they want now. They try to keep it going once. They fail. They go lower. Right now, there's that trend line coming down here, right? Now the buyers have one last chance to keep this thing going. If they don't, where are we going to go? We're probably going to snap right back down to that area here right below us. We wait for that. Either, again, that test the trend line, or we wait for the market to roll over, failure, new hidden channel, right? And again, oh, come on, Joe, get your colors in gear here, right? Failure into new channel. Bob Ross will be proud. Bob Ross will be he'd be a proud guy right now, right? So failure into pullback. And again, we're drilling down, right? We're drilling down on that pullback. That pullback is not off the slow time frame. It's off an 800 tick chart, a 618 tick chart. Nothing faster than a 618 tick chart though, right? It's a trap entry. It's a failure entry right off of that high. A 2-try failure into a reversal, right? Coming off that high. Now, maybe we don't get the reversal. Maybe we don't get that failure. Maybe the market instead just pulls back here for us. And instead of the sellers failing and us buying into it, let's say the sellers succeed, right? And they take it lower. 1, 2, 3 reversal, right? 1, 2, 3 reversal. Now remember, I don't want to hear anybody selling that first pullback. But it's so strong. It was such a strong pullback. Well, then you got to sell this one too, guys. Right? You got to sell all of them. That's the problem. It's easy in hindsight to tell which pullback is a reversal. Unless you see these buyers trying a few times up here, right, and exhaustion, right? Unless you see exhaustion up there, that pullback is a buying opportunity in a bull market, right? Until proven otherwise. Wait for those bears to hold, right? That's your 1, 2, 3 reversal. Now mark that low, mark that high, right? And we're selling off that high. I'm not taking that first pullback. It's not a reliable setup. It's not a high percentage setup. We can do better than that. No, I don't like watching it go without me. Nobody likes to watch the market run without them. But you have to pick your spots wisely when it comes to reversals. I will, though. My job is to find a way in on that first pullback. And where's my targets? My targets are back down, right? Back down at those lows where we came from yesterday. All right, guys? So I'm not opposed to being a seller. I would love to see a reversal off the high. The That'd be great. I wouldn't be opposed to a 1, 2, 3 reversal as well, right? But we got to get momentum turning, or we have to see exhaustion before we go. It does look like at this point, these buyers are going to try to make a run, right, for that spike in channels. So we'll see how this thing goes here in the next few hours. Nasdaq is looking pretty good here. How about some gold? I know. I was talking up gold here, right? The entire time here tonight. Finishing up here on the gold, the yellow metal. Boy, we can really put together a lot of the stuff we've talked about already. We can put that all together on this chart here, right in front of us here right now. Now, as you can see, we're very much a bear market in the gold right now. It's amazing, right? They got that pullback, that deep pullback we're talking about, and that grinder going lower. There are two main components here. One is the range. The range is probably the most important component, right? Ranges, of course, act like magnets. And two is this channel, right? That channel. This is a spike in channel. Now, spike in channels, we've talked about spike in channels a couple times this week already, right? What do spike in channels tell us? They tell us they're going to want to come back into the base of that channel, right? Spike in channels will normally give you those deep pullbacks because the price is so darn low, right? And a lot of them will come right back to the beginning of that channel, right? It'll pull back and then come back down again. We talked about that last night, right? On the Nasdaq, I think it was, right? Absolutely. So, as you can see, spiking channel is one thing, range is one thing. Do you see this two-try failure right now, right? They go below the range acts as a magnet, and you can see, right? The bears have tried once, the bears have tried twice, and now as we come in, market wants to, right, race higher here. Bears have control, right? We're below the range. So a pullback will be dangerous, right? It's going to be difficult to get short up here. Okay. I'd like to get short, but it's going to be difficult. Now, how do I buy this? The buy side really is the easier side right now in the gold, and we'll talk about, right, how to sell this thing here once we're done picking apart the buy side. The one I would like to get, the best one, is the one happening right now. So maybe we get lucky and we get another lower low here. Take out that low. Bears try, right? Bears try once. Bears try twice. Same idea, right? Trend line coming in, stops above those highs, right? We're buying into that, right, with a two-try failure. That two-try failure oftentimes turns into a slingshot reversal in the opposite direction, right? So two-try, 1, 2, run higher here. All of this momentum now, right? All of that momentum now. There's a ton of tension in the market now, right? As the market rolls higher. Nobody wants to miss out on the move higher. Sellers don't want to get stuck in a losing position. Lots of tension now, right? This is where opportunities start to show up. We start seeing that strong run higher. As the market runs higher here, that slingshot reversal, as I mentioned, one of my favorites is that trap, right? Is that trap as we go higher. Now, I know we're bearish overall. We definitely are. Should not be selling down there or selling up there. I would if this hadn't gone below the range. The fact is, we've overextended itself, right? We've pulled back that slingshot so far now that when it slingshots higher, right, they're going to want to get that pendulum swing taken out, right? So again, two-try failure, which unfortunately happened right now, into slingshot, or in this case, two-try entry, trap entry on the other side. That would be a great trade there, right, going in. And maybe we get lucky. Maybe it takes these lows out and we can give it a shot here, right, sometime in the overnight. So buying the two-try failure, buying the slingshot reversal, right, going higher, or let's face it, right, strong move up, buyers hold, and we jump. The minute we see this market jump off the moving average like that is the minute you know this range is no more, right? At that point, forget about why, worry about where to get in. Find that high, find that low, and again, first pullback, right? First pullback is always what? It's always the best pullback. Again, remember, this is a 2,000 tick chart on the gold tonight. You know, high volume. I go up to a 2,000 tick chart when the volume is really high like that, right? 2,000 tick chart. I'll drill down to a 377 tick chart. and find my trap entries, my failure entries, my pullback entries, right, coming off the low of that, again, on a faster time frame. Again, I'm not going to show all that stuff right now. We're already 45 minutes in this video right now, but I do include all of the entry techniques, how to find the channels, how to qualify the entries, how to manage the positions. I cover all that stuff in the Quick Start Trading class. Great shortcut for you if you want to start getting those consistent results and following along with us here on this video newsletter. So again, buy the slingshot reversal. How do we sell it? Right? How do we sell this market? Well, I have to sell at resistance above the range. There are basically two types of shorts I'm looking for here right now. One would be a complete pendulum swing, right? Now, keep in mind, pendulum swings are not exact, right? Really anything in this area here, to be honest with you, would be okay with me. Then, because that momentum is so bullish, right? Remember, this is not a bear market very much anymore. This will feel very bullish. I give the buyers the benefit of the doubt. Let them try twice. Two try failure now, right? Two try failure because of that momentum. Now, there's a lot of different ways we can take these trades, right? One of the variations I haven't talked about tonight is that trap, right? Those traps are money, baby, right? They're great, right? I would say they're gold, but that's a little bit too bad of a joke for us here. So that trap high off that trend line, right? Money. That's a great short. Again, lots of momentum. Up at resistance, though, overall bear market, wouldn't mind getting short up there. Range below us acts as a magnet. The base of that spike and channel, right? It's a great place to get short, but again, don't go forcing it. One try, two try, and then back down in. Now, you know gold, right? If you know gold loves to whip. Let's say, for example, it V-tops up there, right? We V-top, we go up, and we shoot back down again. Now what do? Traps. Right? Traps. At that point, traps, right? If they literally go up and V top, right? Or V bottom, right? Whatever happens on gold. Gold loves to do that stuff. Okay? If we go up and V top, right? Off that top, we slam higher here. Watch that, right? Watch that. One try for the bulls, two try for the bulls, right? We'll trap high on that. That's where you want the entry going back down, right? Into that trading range. And again, the difference is pretty clear, right? We go up, we pull back, higher high, trap low. See that difference? I think it's pretty clear, right? If we see higher highs, look for those traps. If we run up and we immediately snap lower, look for those shorts, right? It's not a huge difference, but it's quite significant, right? The higher highs versus the lower lows is what kind of tells you what direction to be trading in. Okay. Then if we do keep going lower, because after all, it is a bear market. I think now that the Fed, kind of outlined their raising of rates into 2023, it does make sense for gold here to go back into the range it was in, a few months ago, right? And that low of that range is at 1760. Right? There's a major low at 1760 on a longer time frame. We may see this market roll over and keep going lower. Let's say, for example, right, we hold and we start running lower here, it's like any other grinding market. Find those traps, right? Find those traps on the way down to that low. So if we do end up continuing, I'll tell you, I would be relatively surprised if we saw big move down yesterday, and today, I would be very surprised if we continue to take this thing lower. But is it impossible? Of course not. Anything's possible. Tomorrow's quad witching, right? It's a Friday, so anything's possible. But I would definitely expect there to see some sort of bounce right off of this low. But I've got another level down here, 1760. Right? It's a big drop from there. I'll say that for next week here. But as we go lower, right? Watch that grind going lower. Find those traps and just keep on, right? Just keep on hitting those traps as we go lower. There will be a bottom here somewhere. You just don't know where it is. That's why traps are going to be, right, your best bet. All right, guys? So be careful as we go lower here. All right, boy, oh boy, what a video here tonight. I've got us all prepped up for tomorrow. Now, all I need is see you tomorrow morning in our trade room. Gold's ready, Nasdaq's ready, S&P's ready. Are you ready as well? All kidding aside, though, I'd love to have you there tomorrow morning in our trade room, 8 o'clock Eastern Time. I put all the membership information you guys need in the description of this YouTube video, so grab that, hit that button for me tonight. below the blog here at Sideways Markets. Don't be afraid to call the office if you guys have any questions. I got live chat on the left, live chat on the right, and you can always drop those comments in the comment section if you got them. All right, guys, I hope by now I've earned a like on this video. I hope I've earned a subscribe on this channel. Hope you guys enjoyed the video. Please don't forget to share this information with a friend. More people in it, right? It's one of the best things about trading, right? The well never goes dry. It's one of the favorite things about this business of day trading. But that's it for me, guys. I took up too much of your time tonight. Have a great rest of your evening. My name is Joe. We'll see you guys tomorrow morning, right? 8 o'clock Eastern time. If not, come back and see us. Not tomorrow night, but next week, right, for the next edition of our nightly news. So that's it for me, guys. Be well out there. Be nice to each other. And you better be here tomorrow morning in the trade room. Adios, amigos. Bye-bye for now.